If you're like many other aspiring real estate entrepreneurs, then you've probably at least thought of considering the purchase of a multifamily home or investing in multifamily units. Trust me, you're not alone. You see, many prospective homeowners are interested in buying multifamily properties for various different reasons. Some aim to maximize their revenue potential, implement strategies to reduce vacancy rates, or explore house hacking to generate additional income streams. And if you watch until the end of this video, I'll share exactly how to buy a multifamily rental property in as little as 3 months. You see, I want to dive deeper into the workings of multifamily real estate investing and provide guidance on how you can get started. Not only that, but we will break down several compelling reasons to consider investing in a multifamily home. So, grab a pen and paper and let's get down to business. Number 10. Determine your readiness. Let's be honest, investing in multifamily properties offer numerous advantages. For instance, it can provide a more stable income compared to single-family rentals and generate increased cash flow. Not only that, but purchasing a multifamily property is generally less complex and more manageable than acquiring a large commercial property. However, it is essential to acknowledge that upfront costs can be substantial. Typically, multifamily mortgage loans require a 20% down payment based on the property's price, and there are ongoing expenses for maintenance and property management. As a landlord, it is crucial to ensure that all rents are paid on time and deposited into your bank account. To streamline rent collection, you can utilize online rent payment systems like Apartments.com, which offers a fully automated rent payment process, including security deposits, pet fees, and late charges. It also provides customizable lease templates to ensure compliance with state and local regulations.
Before we dive in, be sure to like the video and subscribe to the channel. Do you want the chance to win a brand new iPhone 14 Pro, MacBook Pro, or a $500 Amazon gift card? Find the hidden message that's in the video, comment it down below, and subscribe to the channel. We will choose one random subscriber in each video for a chance to win one of these amazing prizes. Don't forget to hit the like button, and good luck.
Number 9. Establish your budget. Once you familiarize yourself with the pros and cons of purchasing multifamily homes, the next step is to sit down and determine a budget before proceeding with the purchase. Define your financial goals and decide how much you're willing to invest in this venture. Consider various costs and be prepared for unforeseen expenses that may arise. When looking at your finances, take into account the following factors. Closing costs. These costs typically range from 2% to 5% of the property's sale price. They include fees from lenders, title insurance, and property taxes. Higher-priced homes will incur higher closing costs. Carrying costs. These encompass the monthly recurring expenses associated with owning the property, such as mortgage payments, taxes, insurance, and utilities. Renovation costs. Depending on the property's condition, you may need to invest in minor or significant renovations before renting it out. Evaluate the amount you will need to spend on the property before proceeding further. Ongoing repair costs. These are variable expenses that can arise at any time, such as plumbing issues, water heater malfunctions, or roof leaks. It is important to have a planned profit margin that can cover unexpected expenses. Timeline. Consider the time required for repairs or renovations, finding tenants, and initiating rent collection. Prolonged renovation periods will lead to higher carrying costs. Number 8. Explore different types of multifamily properties. While multifamily properties are often viewed similarly from an investment or financial perspective, the term encompasses various building types. The main categories of multifamily properties include residential multifamilies, duplexes, triplexes, apartment complexes, and turnkey properties. Before initiating the investment process, thoroughly research each type to determine which best aligns with your financial goals. During your research, you might discover that a different property type suits your needs or the rental market better than initially anticipated. Number 7. Research potential neighborhoods and select a location. Experienced real estate investors understand the crucial role location plays in determining financial success when purchasing multifamily properties. Rather than merely opting for a nearby duplex for sale, dedicate time to researching potential neighborhoods in your area to identify the most profitable locations. Identifying desirable locations for investment properties is a significant aspect of making a wise investment. This requires gaining a solid understanding of the rental market in your target area. Factors to consider include average rental rates, vacancy rates, employment rates, and average price per rental unit. You can access a wealth of real estate data online through reputable sources such as the U.S. Census Bureau and the U.S. Bureau of Labor Statistics. If you require local MLS data, reach out to a real estate agent in your area to gather information or create a rental market analysis. Number 6. Choose your lender. Finding a lender to finance your real estate investment can be a time-consuming process. Financing an investment property often differs from financing a primary residence in terms of requirements, interest rates, and loan types. It is crucial to work with a professional who understands the intricacies of real estate investing, especially if this is your first rental property. The appropriate loan type for your investment will depend on the property you plan to purchase. Thus, it is important to be well informed about each property type before beginning your home search. For instance, if you intend to live in a triplex, you can opt for a Federal Housing Administration or FHA loan that allows a smaller down payment. If you're purchasing a property that requires renovations, you might consider a hard money loan. Unlike most banks, hard money lenders recognize that properties possess greater potential after repairs, so they provide loans based on the property's after repair value. This enables you to access more funds for the purchase and renovation of a multifamily property. Apart from loan type, you should work with a lender who specializes in investment properties. Rental property loans typically carry higher interest rates due to the perceived risk involved. Some recommend investment property loan providers include PennyMac, Lendio, PNC, Quicken Loans, and Lending One. Number 5. Obtain your pre-approval letter. Once you've chosen a lender, obtaining a pre-approval letter is crucial before visiting potential investment properties. Multifamily investments can be competitive, so having a pre-approval letter for the purchase amount enhances your credibility when making an offer. Number 4. Find a real estate agent to assist you. While the process of purchasing a multifamily property shares similarities with buying a single-family home, there are key differences that require specialized expertise. It is essential to work with a qualified real estate agent who understands the nuances of purchasing investment properties, particularly if this is your first rental property. Take the time to search for and interview several agents with experience in investment properties before making a decision. Listing websites like Zillow, Realtor.com, and Refin are excellent starting points for your agent search. Number 3. Narrow down your search to a specific multifamily property. Once you've established a clear budget, secured an agent, and obtained pre-approval from a lender, you can begin searching for potential multifamily homes. There are multiple avenues to find investment properties for sale, including online marketplaces, local MLS listings, with the assistance of a real estate agent, or exploring properties in pre-foreclosure or foreclosure. Regardless of the method used to identify potential properties, evaluate them with the mindset of an investor, landlord, and owner. Assess the income potential and return on investment based on factors such as the property's price, estimated repair costs, potential rental value, and appreciation rate. Utilize tools like the gross rent multiply calculator to compare and contrast similar properties. In addition to considering basic factors like the number of bedrooms, bathrooms, layout, and size, pay special attention to other critical elements. Location. Take into account the local rental market and the property's proximity to schools, hospitals, stores, and recreational activities. Maintenance history. Review past maintenance work on the property to gain insights into potential repairs and upgrades that may be necessary. Additionally, consider any deferred maintenance as it may entail additional costs for you to address after purchasing the property. Remodeling potential. Explore creative ways to maximize the space's utility through remodeling. For example, adding a wall to create an additional bedroom could significantly enhance functionality and profitability. Resale value. Even if your intention is to hold the property for a long time and rent it out, it is prudent to consider the potential pros and cons of listing the property in the future. Since demand for multifamily homes is typically lower, selecting a property with appealing or unique features can increase its value. Number 2. Make an offer on your chosen multifamily property. While purchasing investment properties can be competitive, it is crucial to have a comprehensive understanding of all the numbers before making an offer. Utilizing a competitive market analysis can assist in determining an appropriate offer price. This report estimates the property's current value by analyzing sales and property data from comparable homes, often referred to as comps. Your real estate agent will prove invaluable during this process, as they will create the CMA and negotiate with the seller's agent on your behalf. Armed with a clear budget and accurate data, you can confidently determine the amount you're willing to offer for the property. Alternatively, platforms like Roofstock allow you to list a property and make an offer at no cost. You only pay a fee of 0.5% if your offer is accepted. Ensure that your offer includes the purchase price, pre-approval letter, any necessary contingencies, and the closing date. Number 1. Secure funding and complete the property purchase. Once the seller accepts your offer, you will commence the closing process. If you're obtaining financing from a lender, this phase typically takes around 30 to 60 days. Depending on your state's legal requirements, you will hire an attorney, obtain title insurance, and fulfill any home inspections or appraisals specified in the offer. Finally, on the closing day, you'll submit the down payment, complete all the necessary paperwork, and receive the keys to your new multifamily property. So, are you ready to buy your first multifamily property? Please leave your thoughts in the comment section below. As always, don't forget to like the video and subscribe to the channel. In fact, if you want a step-by-step guide on how to finance your first multifamily property, watch this video next, where we'll break it down in complete detail. So, click the video on the screen and we'll see you in the next one.